Welcome to our Abundant Retirement Podcast. I'm Tony Roberts, and I'll be hosting today with hopefully some questions and answers that will be able to bring some knowledge and some degree of comfort, hopefully, to some of it that are out there. As always, I've got my man Tony Shore on the other side of the screen that is giving me hopefully some questions today that will be thought provoking, and again can give you people that are listening a little bit of insight into what's going on in our good world of retirement planning. And Tony, I must say, my friend, retirement planning is a bit volatile these days because there's a lot going on, especially in the federal workforce. As you well know, we work heavily and very prevalent with federal employees. So yeah, since the first of the year, a little bit of anxiety in some of the departments of our federal government, and well deserved. Um, whether people deserve to have their jobs cut or not is something that is far beyond me to make a recommendation of. But at the end of the day, Tony, um, whether whether the job is something that needs to be there or not need to be there, that's not really the question. You've got a person that is dependent upon a paycheck. They might be paying their mortgage, car payments, putting kids through school, and all of a sudden they may be told that their services are no longer needed, and that is that's something to have to get through, my friend. And it's not an easy task, and I think it's leaving a lot of people with some very high levels of anxiety and things like that. So got a little bit rambly there, my friend. Sorry about that, but as always, Mr. Shore, I'm so glad that you're here giving me direction today, especially with our lovely technology programs and problems that I have no clue about how to work. So anyway.
Yeah, it seems like the more technology we get, the more problems we have. I don't understand that. So the more complicated things become. But speaking of complicated, you're right. It is understandable that a lot of people are stressed and worried. A lot of people have lost their jobs, or their jobs might be up in the air, or maybe given options to take an early retirement. Should they? What should they do about their pension? Do they do lump sums? Do they do payouts? Sometimes they have options, sometimes you don't. But if you're laid off, whether you're a government worker or not, any worker, but especially right now, a lot of the folks in the area are federal employees and have either gotten laid off or asked to retire early. You definitely need a plan in place, and there's a lot to go over. I think, what do you do with your TSP or your 401k or your IRA?
Right.
How will that affect it? That's probably a big part of this, right?
Oh, it's an immense part of it, and again, uh, people just don't know. I mean, Tony, for the most part, hardworking, everyday Americans that have gone, to the shop each and every day, put their work in, try to do their best, and especially with federal employees. I mean, a lot of these people are 20, 25, 30, 40-year people, and they've put their money into their TSP. It's being matched by the government. It's growing. Um, we can go back and forth about only having basically five options to invest your money in, but that's a thought for another day. But these people, a lot of them have got sizable amounts of monies in their retirement plan, and some of them are being, some of these departments are being downsized. Some of these people are being asked to leave with different stipulations. I mean, some of them are being offered early retirement. Some of them are being offered the ability to be on administrative leave through the end of the year. There's different types of tasks going on. But with all of that being said, a lot of people are saying, what are my options with my retirement monies? And Tony, as you well know, probably the first thing that you need to look at is to say, well, what is your plan if retirement is being forced upon you?
Right.
So again, I would always start with, have you had somebody formulate a plan for you that will allow you to understand what the next 30 to 40 years are going to look like?
Yeah.
And is it being done from a conservative standpoint? Is it being done with very low growth rates? so that we can run it through what I call a stress type scenario.
Sure.
Um, but once that is done, then, what are your options? Are you under 59 and a half? Are you over 59 and a half? That makes a lot of difference, because if you're under 59 and a half, there might be some monies that need to be left in your most recent employer's retirement plan in order to be able to pull those monies for retirement and avoid an extra 10% in tax. So again, these are just things that you've got to have somebody walking along beside you that are giving you some strong advice, some leeway as to what things are going to look like. And then you've got to sit there and start setting up your accounts and getting things under your control. Um, and that's probably the most important part, Tony, because most of these people, especially the ones that are being sort of, asked to, and shown the door,
Yeah.
may not want to be leaving their money in the government's TSP anymore. They
Right.
might say, "Hey, look, I'm not good enough to work for you. Why am I good enough to leave my money here with you?" So again, what are the implications? If you're trying to get yourself lined out so that whether you go get up another job or not, you've got an answer as to, hey, look, how much longer is this thing going to work, and
Yeah.
what's it going to look like?
Yeah, exactly. Well, here's a question for you. So, let's say somebody, especially a federal worker, if they're recently out of a job, and they have a TSP, and maybe even some nowadays, they might also have a 401k. They have some type of employer sponsored account like a TSA. What are their options for what they do with it?
Well, there's three or four different options. One, and probably the most prevalent, Tony, is that you can take those monies and roll them over into your own self-directed IRA. Uh, that is probably what I would suggest to the majority of the people. And the reason for that, Tony, is it gives you control. This is your money. You've worked all your life to accumulate these savings, and now you have control about what's going to happen to them as far as directing, what type of risk you want to take with investment portfolios or whatever the case may be. This puts you in control. Again, we have to be cognizant of the fact that if you're 59 and a half or under, we may have to leave a little bit in your former employer's plan, just because if you need cash flow, we want to avoid that extra 10% tax. So again, that's one thing you need to look at. Um, some other options: if you go to another employer, you have the ability to roll that money over into your new employer's plan, but now you're going to be beset with all the regulations and rules that go with your new employer's plan. You may not have the ability to get in there and get to your money if you need to. You may not be able to do maybe some Roth conversions if you want to do some advanced tax planning, things of that nature. So that's, again, but it is for the most part an option that exists out there. Um, Something you probably don't want to do above and beyond whatever, what I call right now monies that you need, is taking a distribution yourself, because that is going to trigger automatic tax. And again, you know, it doesn't take a lot to start creeping up in the tax brackets if you start taking a lot of distributions and things of that nature. So
Yeah,
that's another piece that you need to look at. Um, you can leave it You can leave it where it is. You can leave it in the TSP. You can leave it in your company's 401ks. But again,
sure.
most of the people I work with, especially if they've been shown the door, they just don't have a warm and fuzzy feeling about the
No.
company that showed them the door. So the last thing
Well,
they want to do is leave their money there. So,
yeah, I mean,
there's
that's
some
an
things to look
option
at.
you wouldn't recommend anyway, is leaving it at a place because you're no longer contributing to it. So you don't get the growth. It's not being openly managed. You're not working there. Why should your money be? Right.
I, Tony, yeah, I couldn't agree with you more. And,
Yeah.
but again, Tony, change is hard. I
Yeah.
mean, I don't care
Sure.
what you're doing. Change is hard. And
Yep.
a lot of these people, like I said, they've got 20, 30, 40 years invested, and all they've known is TSP. So,
Hmm.
they've got a Tony Roberts walking into the room and say, "Hey, look, trust me, and let me show you the way here." I don't have 40 years of track record with these people. So these folks have got to sit there and have some type of reasoning with themselves of saying, and again, whether it's me or somebody else, but of saying, hey, look, I've worked long and hard for these monies. Is this the person that I want to have giving me guidance and having meetings with me 3, 4, 5 times a year, and let me know, are we on the right track? Are we doing what needs to be done? If we have some hiccups, what are our options? What do we need to do? Um, do I have tax implications? Is long-term care going to be an issue down the road? Different things like that. So again, having access to your money gives you the ability to be in charge. And in my opinion, that's very, very important.
Yeah, I think it is as well. I mean, obviously, you want to have more control over your money, and therefore, maybe better to roll it into an IRA where you can work with a financial professional like yourself to make sure it's actively managed, or it's going to be allocated to your risk level or your risk tolerance. You can also roll it into a new employer. That's not as bad as leaving it there. I would say another option that you probably don't recommend is cashing it out, right? Like taking it out, right?
Not unless you got some major losses that you can help offset those taxes, because
Yeah.
you know you're not only going to get hit, and again, the 59 and a half rule. If you're under 59 and a half and you take a distribution, you're going to get hit with the tax plus a 10% penalty.
Yep.
So that you could have 50% of your retirement portfolio wiped out if
Yeah.
you took a distribution versus a rollover. So again, I
Wow.
just don't recommend it. And again, Tony, this is part of what goes into talking down with a specialist so that they can lay out a plan for you and
Hmm.
understand what your needs are. Um, well, we've got several people right now that have left federal government. They've been very fortunate. They've landed new jobs. Many of them have landed new jobs that are actually paying them more than what the federal government was paying. So now they're getting a pension. They're getting a new check, payroll check from the new employer, and they don't need the money from their retirement plan yet because, again, they're sort of double dipping.
Hmm.
And in many
Yep.
cases, these people are taking their pension and rolling it back into their retirement plan. So having it someplace that is safe, secure, aligned with your risk profile. Do you want to be taking 100% risk? Do you want to maybe have it diversified, 40, 60, 50, 50? These are things that have got to be looked at and worked on. And I'll tell you something else that's going on right now, Tony, as well, especially these people that got that pension check coming in. They've got a new payroll check coming in as well. A lot of them are taking care of future long-term care needs by taking like these new hybrid life long-term care policies, and they're taking some of these monies and stockpiling that money up front so that they can have this thing paid off and paid up by the time they get ready to fully retire, and not have to be worrying about life and long-term care premiums as they go through retirement, but having the benefits there in their hip pocket. So, man, they're as my grandfather used to say, every time somebody takes opportunity away from you, new opportunity opens up. And with a lot of these people, that's exactly what's happening. It's just still, Tony, you got to go through the anxiety of, being let go, losing your job, or whatever the case may be. And that
Yeah.
that part of it's sad. It's sad.
Yeah. It is, and it's a tough time to deal with things, and like knowing, okay, how do I roll it over? Do I do a direct? Do I do an indirect? Where does it go? These types of decisions can really be costly, and you can really make costly mistakes. So you don't want to do it on your own. You want to consult and be working with a financial services professional like yourself. So before we go on, I just want to remind our listeners that you do offer a no charge, no obligation consultation. If they have
Mhm.
questions, you love to hear from our listeners and viewers out there. How can they get a hold of you, Tony?
Well, there's several different ways. You can go to our website, arobertsassociates.com. Again, arobertsassociates.com. You can call us toll free at 888-955-3665. Again, 888-955-3665. You can go to at abundantretirementplanning.com, info at abundantretirementplanning.com. So there's a lots of different ways. Call the office. One of our team members will pick up. Everybody has access to my calendar. You will be meeting with me in that initial meeting, so that we can get to know each other a little bit, get to find out what your scenario is, get to find out what your concerns are, what may be keeping you up at night, and trying to put some some plans and some feedback together that hopefully take some of that anxiety at the table.
Yeah. Yeah. And I think that's really important. So, again, for our listeners out there, just before we go on, give Tony and his team there at A. Roberts and Associates a call, 888-955-3665. And then talking about once you leave a job, you've got to look at a lot of different things. You've got to look at, like you mentioned, tax implications, and you mentioned distributions from your retirement accounts. How's that going to affect you? All of these things go into the overall plan that we're always talking about. You're always bringing this up on the show, Tony, because it's so important. People go, why do I need a retirement plan? I've got my TSP or my 401k. That's what I'm going to use in retirement. But you can't just do that and know that you're going to have enough money to make it to last as long as you do, and without losing a lot of money along the way, right?
Yeah, because you got to know where the money's coming from, Tony.
Yeah.
I tell people all the time, while you're working and somebody else is in charge of the paycheck, you wake up every other Friday and there's money sitting in your account. Um, Even when the market's down and you're contributing to your TSP or your 401k, guess what? You're buying bigger chunks when the market's down. And then when the market starts to rebound, you've got more units that are rebounding for you. So you've got somebody else that's in charge of paying you. You're not using money out of your retirement plan to supplement your retirement income while you're working. So all of these things work hand in hand with, again, trying to build that nest egg up to be as big as possible. Um, Whether you retire under your conditions or whether you retire because somebody else has decided that they're going to retire you themselves, regardless, you've got to sit there and say, do I go back to work? Do I put the rocking chair on the front porch and say I'm done? And if you do, then now you're in charge of the paycheck, and what's it going to look like, and where are those monies going to come from, and how much tax is the IRS going to pull out of it when they decide to send you the paycheck. You're going to have to get used, Tony, to living on probably checks that come in monthly versus maybe every 2 weeks or on the 1st and 15th. So again, it's a tweak to the way that you go about doing things, and you just have to become accustomed to that. And again, the people that are flexible enough to start working with those new concepts and ideas and strategies and different things like that are the ones that don't have as much anxiety. Um, and these are all things that have to be done. We've been blessed that we've done this so long that we have the ability to go out there and put these plans together, and we try to do it at a place, I try to speak to people so they understand what the heck I'm saying.
Right.
Let's use simple English here, folks. And I'm not trying to impress you with, financial terms and innuendos that don't make a heck of a
Sure.
lot of sense because nobody understands what the heck you're talking about.
Right.
But, put a plan together. I'll tell you something we do, Tony. I don't know if I've ever mentioned this or not. We have what we call a client bill of rights. And it's simply about 16 or 17 bullet points that say, this is how we're going to treat you as a client. And again, it's a lot of common sense stuff.
Right.
We're going to get back to you within that day or within a 24-hour period. If you call or leave us an email, we're going to try to explain things in English that you understand. If there is a mistake that's made, we're going to recognize it. We're going to fix it as quickly as possible. We're going to make sure that there's transparency. You understand what's going on with everything in your accounts and stuff like that before we ever do it. So again, we outline this, and I would think, Tony, that this is something that every advisor is doing. But we have numerous people looked at me and said, nobody ever put this on paper, signed their name to it, said,
Right.
this is how you're going to treat me if I decide to come work with you. And we also lay out, I don't know, 6 or 7 different bullet points to the client of saying, if you can give us this feedback and this additional clarification, it will help us be better, in working with you and for you and things of that nature right there. So a lot of it works hand in hand. We try to be a professional in every aspect of our business. Do we fall short sometimes? Sure we do. Nobody's perfect. But for the most part, it's not because we're not trying. And
Yeah.
I had a new client that came on board the other day, Tony, and she didn't have to say this, but she did. She said, Tony, she said, I just want you to know, I don't know, it's probably 4 or 5 times we've been together now, but she said those first 3 or 4 times that we were together talking about, putting my plans together and everything else like that, she said, I truly got a feeling that you care about me and care about what happens to me. You're just not doing this to make sure you get a paycheck.
Yeah.
And Tony, that's true. That is really what we try to do. I have operated for over 40 years now saying, if you take care of your clients, the clients will take care of you. And that, to me, it's a true statement. It's a true philosophy, and it's how we try to operate. So, these are things that we try to be accountable. We try to be professional. We try to be specialist in our task at hand. And at the end of the day, we try to do the best job possible
Yeah.
for each and every one of our clients.
Yeah, and I think it illustrates why it's so important to work with a financial professional, because everybody's situation is different and you want to be able to meet your goals, and that's what you do is you listen. Okay, what are you trying to accomplish? Okay, here's as a financial professional and fiduciary, you're going to find the best way that they can meet their goals and what's in their best interests, right?
Exactly right.
Yeah.
Exactly right.
And that's so
So,
important
yeah.
especially when maybe you've recently been looking at, should I retire early? If you were forced out of a job, am I going to need to get another job, or can I retire early? Well, you don't want to just guess at that. You want a financial professional to run reports, look at where you're at, look at what you want to accomplish, and make a wise decision based on all the facts. And I know this is something you've helped so many people do, is figure this out, right?
Well, and that's exactly right, Tony. And again, I go back to sort of the topic of our podcast today, is that what if after, whether it be 2 years or 22 years or 32 years, what if you're saying, hey, look, your services are no longer needed, and maybe you're not ready to retire. Maybe you need to go find another job and this, that, and other. The last thing you want to be worrying about is your money and your retirement monies and whether or not you've got a good plan in place and this, that, and the other. If we can take that off the table for you, so you don't have to have that anxiety and waking up at 4 o'clock in the morning saying, oh my gosh, is this thing getting ready to blow up or not? Just think how much easier that will allow you to go out and look and do what you need to do to get yourself lined back up, whether it be with a new employer or whatever the case may be. So again, you surround yourself with specialists. Some of the smartest people in the history of this country have always said, hey, look, those things that I do very well, I'll do myself, but those things that I don't do well, I will go and find people that are specialists in those areas, pay them, allow them to do the job for me, and probably do it a heck of a lot better than me trying to go out there and do it myself. And again, that's what we do. I mean, if I feel like an elephant sitting on my chest, I'm probably not going to go see my internist. I'm probably going to try to find a cardiologist real quick. So again, that's part of it. We're the cardiologist. We're not the general practitioner here.
Yeah, exactly. So, how can our listeners, one more time before we go, we'll wrap this up. How can they get a hold of you to ask questions or get that plan in place?
Yeah, and again, Tony, the initial consultation, we're trying to get to know each other, might be collecting data. I don't know. It would people that walk in my door, I don't know if I can help you or not, but at least we'll have a conversation about it, see if something starts making sense or not. So again, you can reach out to us by email. You can go to info@abundantretirementplanning.com. Again, info@abundantretirementplanning.com. You can go to our website, arobertsassociates.com. Call us toll free, 888-955-3665. Again, 888-955-3665. And also, Tony, in addition to all the venues where this podcast runs, if you go to the website, arobertsassociates.com, it's got all of our past podcasts listed there. So if you want to go back and listen to some commentary that we did, a few months back or whatever the case may be, it's all housed there.
Yeah, it's great.
Yeah.
Well, great show today, Tony. I really appreciate it. And listeners, that does it for today's episode of Abundant Retirement with our host, Tony Roberts.